I think all of the foundation is absolutely there, but this is a long-term build. We've been at this. We built an excellent foundation. I think a unique foundation that probably doesn't exist anywhere else in market infrastructure. And I think the next few years, it's about scaling it to the ambitions and the blueprint that we have.
Welcome to Smarter Markets, a weekly podcast featuring the icons and entrepreneurs of technology, commodities, and finance, ranting on the inadequacies of our systems and riffing on ideas for how to solve them. Together, we examine the questions: are we facing a crisis of information or a crisis of trust? And will building smarter markets be the antidote? This episode is brought to you in part by Abaxx Exchange, where trading in centrally cleared, physically deliverable LNG and carbon futures contracts is now underway. Ready for smarter markets?
Welcome back to Markets in Transition on Smarter Markets. I'm Dave Greely, Chief Economist at Abaxx Technologies. Our guest today is Josh Crumb, founder and CEO of Abaxx Technologies. Josh is joining us to mark this 200th episode of Smarter Markets. We'll be discussing what we've learned and what's been accomplished so far in turning this Smarter Markets vision into a reality. Hello, Josh. Welcome back to Smarter Markets.
Hey, Dave.
This is our 200th episode of Smarter Markets, and I'm glad to have you here with me today, Josh, to reflect on that journey and talk about what's next. And while Smarter Markets is the title of the podcast, Smarter Markets is also how we refer to the vision that ties together the many dimensions of Abaxx. And I would describe the Smarter Markets vision as one of a world in which we as individuals are able to work together through markets that are empowered by better pricing benchmarks, tools, technology to create market-based solutions to the biggest challenges that we face together. And I wanted to ask you, after 200 episodes of conversations on how to build smarter markets, how has your vision for smarter markets come into sharper focus? And how has this Smarter Markets vision guided you as you've built Abaxx Technologies?
Yeah, great. It's a good question. I know we reflected on this on a few episodes. I think the 100th episode with Robert Friedland. And I think at that point we had talked about how it's almost like an impressionist painting, in some ways, where you kind of know where the world needs to head. But, as you go, it becomes more and more in focus. And I think that's absolutely the case. I think there's a lot of these topics we'll talk through today. But first, I have to recognize in preparing for this call, I think the last few times I've been on, it was always a vision. At this point, as of June 28th, we launched our new commodity futures exchange and clearinghouse with a brand new state-of-the-art tech stack. And so now we're part of markets history with, having that first trade of Gulf Coast physical LNG trading FOB Gulf of Mexico. It's nice to be part of markets history. And so absolutely, we now have the machine to help keep zooming on all these topics and part of the vision, execute and make them happen. So that's the most exciting part. And the biggest change is, we now have the rest of the tools to make this a reality.
And that's a big shift. And I wanted to ask you about a couple other shifts as well, because two of the prominent dimensions of Abaxx that we've discussed over the years and that people are likely familiar with are the focus on the development of market infrastructure, like the exchange, and also the financial technology. Now, you were early to see the need for a new commodity futures exchange and clearinghouse, and for new, more secure ways of handling our digital identities. And both of those needs are now being made apparent by some big seismic shifts that everyone is seeing. We could put them under the umbrella of the energy transition to a low-carbon economy, making clear the need for new commodities markets and exchanges, and then the rise and rapid growth of artificial intelligence, making it more clear that we need better ways to handle our digital identities. How do you see both of these as game changers for driving the commercial need for what you're building at Abaxx? Maybe we could start with the energy transition piece and then come back to talk about artificial intelligence.
These are the two key themes. And again, I think going back to the impressionist painting analogy, we kind of knew the things we needed to build to be prepared with things that were likely coming. Now, of course, since we started this journey, we had two major sort of events, obviously very outside of our control, that sort of accelerated the need for all of the things that we're doing. One, of course, being Russia's invasion of the Ukraine and how that changed the global LNG and energy landscape, significantly, as if it wasn't a big enough challenge, what we had put in front of us with the energy transition. That was one thing. Having more market infrastructure, having more competition in markets, having other players ready to pick up the shovels, so to speak, and try to fix something. We're a couple years on now from the nickel market essentially breaking in one of the other major markets, and yet there's still not another nickel contract traded globally. In my mind, that's the competition issue, and we need more people in the markets to be able to try new things and innovate. Again, we can spend a lot more time. I think there's some underlying themes there to dive into. But that was number one. And then on the technology front, of course, number two was the implementation of the transformer model in AI and what that's done for large language models. I'm sure we can spend more time talking about, probably even more interesting, being a translator, not of words on a screen, but really being a world translator, a world model translator, things that are now being able to be done in the information landscape. These were two things that we obviously couldn't have predicted back when we started this journey. But again, both absolutely kind of reiterate the need for the products and the projects and the infrastructure we've been building. But maybe one way to take this forward, it's one of my favorite Robert Friedland stories. Of course, Robert kicked off this whole podcast journey with us. One of my favorite Robert Friedland stories is when he goes back to those days with Steve Jobs and Reed College, and him recalling back in the early days, Steve saying, holding up an Etch-a-Sketch and saying, one day we're going to have all of the sum total of human knowledge available on a tablet like this. And I think that's incredible because, we're essentially there. We're very, very near there. And that vision, which I'm not sure I want to do the math, I'll let Robert do the math of when that was, but the world is moving forward in just unimaginable ways. And, Abaxx itself, the name Abaxx comes from essentially the predecessor of the abacus. And that was really the first sort of human calculator, was essentially drawing on a sand table. And of course, we took the sand table into tablet form. And that's really recognized as the invention of writing. Well, now that tablet form is more than just our individual or collective groups sitting around a sand table marking in the sand. And now we have all of human knowledge essentially at our fingertips. One thing that I wanted to go through here, I will just type it in right now. We built a RAG, a retrieval augmented generation engine, of all 199 of our first episodes of the podcast. So I am just going to type in, I'm going to ask the first 199 episodes what the top 10 themes discussed on Smarter Markets are. So as I pull that up, processing, and this will get faster. Okay, here we go. Let's see if we get this right. I think maybe you and I can just talk through these themes as retrieved almost instantly through 199 episodes. I don't know how many hours that would be. Probably ask that too. So theme number one, energy transition. And I think probably we should kind of discuss. I mean, you've obviously been on the other side of a lot of these conversations. Actually, just as I glance through these right now, in some ways, I'd probably score, not that high where things are going, where things are at a few years on. So I guess theme number one, energy transition. What do you think, Dave? Like, where are we at in this journey globally?
That's a great question. We're actually going to have that conversation in a few weeks at an FT event over in Singapore. When I think about where we are in the energy transition, some of the early podcasts with Jeff Curry in particular, talking about putting a price on carbon. How are we doing at putting a price on carbon? I'd say that's been a big challenge. Certainly the voluntary carbon markets haven't moved forward as quickly as people had anticipated even 2 years ago. A lot of progress in the compliance markets. But do we have a price on carbon that's guiding people's use? Certainly not worldwide, certainly regionally. And I think there's interesting decisions about how to move forward on that path. I think on the energy transition side, this idea of widespread electrification supported by low carbon renewables, it's interesting how it's playing out, right? There's tremendous growth in electric vehicles in China. I don't think people thought China would be leading the way on that score, but China's certainly making a lot of progress. The use of LNG in trucking in China, I think people weren't anticipating that would be the way to displace oil. So I think it's playing out, probably not as quickly as people anticipated, but I think in very new and interesting ways. one of the things that also comes to mind for me when thinking about energy transition is how much nuclear has been embraced. When you see these AI centers that are being built out and the big tech companies securing nuclear reactors, the reopening of 3 Mile Island in Pennsylvania kind of comes to mind, how much that's been embraced with not a lot of pushback as far as I've seen. So that's another ground too, where, on the one hand, we knew there'd be a lot of demand for electricity and electrification coming off the energy transition. I don't think anybody realized how much demand would be coming because they didn't see the artificial intelligence demand for power and compute coming as fast as they did.
Yeah, no, that's great. And by the way, I think you've knocked out 3 or 4 themes in that one. But no, I mean, you're absolutely right. Number one theme was energy transition. 2 was carbon markets, which you touched on, which again, I think, probably if we were going to score it, particularly the voluntary markets, it's not looking like a great score right now. We absolutely need to make more progress on that. You touched on LNG. I would say on the supply side, absolutely, the world is kind of fallen into place at least as I expected. And I would say, even the work you and I did at Goldman 10, 12 years ago, maybe longer at this point, mapping out the future of LNG, certainly the supply side is doing what we expected, right? Just the revolution and, associated gas production and exports from the US. We're going to likely have Canada starting up, if not now, by the end of this year or definitely in next year, which is a major advance, getting obviously in a ship closer route to Asia. You've seen expansion upon expansion in Qatar. So again, I think the supply side of the equation has been great. The demand response, the ability to displace Russian gas in Europe, I think has been incredible. And again, and in many ways, I like to say our physical infrastructure and being able to divert cargoes at that time worked better than our financial infrastructure, if I'm going to be frank. Our financial infrastructure was not set up to handle that crisis. We had firms going kind of cap in hand to central banks, including clearinghouses, to deal with that shock to the system. But our physical supply chain did extremely well. So again, we can be very proud of the resiliency built in our global energy system. I'd say a little disappointed that our financial systems and financial infrastructure still lacks some progress. And we've had guests on the LNG side as well, talking about the demand side, that a key piece of why there isn't better demand building, particularly in Asia, where the natural demand is and will be for growth, and we don't have clear pricing. We've had guests and clients recently saying, when LNG is benchmarked to crude oil coming out of the Middle East at a volatile time, that doesn't make sense for us building up demand. Or when LNG is benchmarked on a price assessment that's essentially just abstracting the price of coal to gas switching in Europe, lignite and TTF. Why are we talking about billions of customers paying for the price of lignite switching in Germany? It doesn't make sense. So pricing, I think, is still going to be a key part of building out that demand side, which is obviously the work that Abaxx has been doing, along with a lot of our partners in the industry. It's going to take time, but I think that's a key part of it. So sorry, getting off the list a little bit. Let's just run through the list of topics because we're kind of hitting all of them, as you can imagine, right? Because they are interconnected, right? So we have energy transition, carbon markets, risk management. So we talked a little about that and state of risk management, commodities super cycle. We have geopolitics and energy, market transparency and efficiency, call that blockchain and decentralization. We have technology. And then we have sort of 2 themes around capital market investment and ESG investment. So again, these are all interrelated systems. And I think we already knocked out a few of them that way. But, maybe let's turn to the related aspects of commodities supercycle and capital investment, ESG investing. We could probably blend those. What is your feeling of where we're at, the supercycle and capex supercycle?
I think it's a great question because on the one hand, it's another aspect of things that are playing out, but I don't think they played out the way people expected. If I go back to some of the conversations we were having a few years ago on the podcast, there was a lot of ESG. It's going to be investor driven. We don't want to invest in, say, fossil fuels. We want to invest in new types of infrastructure. And then at a certain point, people really started walking away from the ESG label. I think that really happened around that signal event that you referred to, the Russian invasion of Ukraine and the European energy crisis. And you saw that pendulum swing hard from a focus on energy sustainability to security. And when you look at that, I think what's moved forward is a little bit more practicality in what that looks like. And I think it also brings about, when we say smarter markets are about empowering people, some of my favorite parts of the podcast are when I talk to people with an entrepreneurial bent who are out trying new things. So whether it's, how do you get LNG into the retail markets in Asia and China so that you can help displace oil in some of those areas, whether it's people working on new forms of carbon capture and sequestration, and being able to get those pricings, get those forward curves so that people can lay off the risk and get that investment capital they need. To me, that's the most exciting. Of course, we've had things like the Inflation Reduction Act, which has made a lot of money available to go into these investments. China's directed a lot of money. Like if you look at what's happened in solar, you can't help but be impressed. So certain technologies, I think, are really scaling faster than people thought they would. Money's flowed, a lot of it directed by governments. I think we still need more on the market direction side. We got to get these prices right. We got to get these forward curves. We always talk about the U.S. natural gas market as being an example. You look now, the U.S. is probably the biggest producer of oil in the history of the world, biggest producer of gas, largest exporter of LNG. And a lot of what made that possible was fracking and the growth of that production. And that was driven to a large extent by one, technological breakthrough, but even more importantly, being able to invest capital behind that technological innovation. Because you had the Henry Hub gas market, these producers were able to lay off risk and get the investment capital they needed to really build out a truly impressive industry. And to me, that's kind of the model you want in these other areas that, whether it's solar, LNG, all these investments we need, can entrepreneurs go to a market, de-risk using a forward curve, and use that de-risk position to get the investment capital they need. And I think that, as you said, we just got the exchange launched a few months ago, building up. But I think that, to me, is the aspiration, that it becomes the exchange where that can happen. And that's what I mean by building smarter markets.
Yep. No, that's a great answer. And I totally agree. I mean, I like to say a physical supply chain going one way is just a financial supply chain going the other way. And you need both to function, hand in hand. That's exactly why we focused, in the globalization of commodities, the globalization of information. That's why we focused on water commodities, on water buyer and seller of last resort markets, because we think that's the bridge, the bridge between local markets. And look, we had a great series on history of markets and technology, and it was kind of the same thing, right? The progression from technology at the time, communication technology allowed us to get a message into a runner on the floor to get to it into a trading pit, right? That was our communication technology at the time. And so your markets were constrained by, literally the physical space in the building to build trading pits. So we had venues like the NYMEX with less than, 10 contracts for decades. And then, of course, we had that great episode with Joe and Dan talking about the launch of Clearport and being able to expand the NYMEX market from less than 10 markets and 10 pits, to listing thousands of products. We heard some of the discussions on that series about the internationalization, where some of these markets are now what used to be a US market, and which used to be a very exclusive market at that of, who could actually get that, telex wire or whatever got to the runner to get to the floor. We've now built some of these markets to be 30, 40% global liquidity of, international orders. And of course, crypto has taken that to hyperscale. We're definitely seeing the growth of information technology, be able to bring more access, faster access, to the markets, which again, I guess blends into the technology theme. Back to my point, this is exactly why, why we've been building these markets, to continue to bring that, build that international bridge of commodity markets, which are all connected. But, to your point on, before we obviously take a deeper dive on technology, I think, the other important part of the capital flows, as you mentioned, a lot of it has been driven by government policy, mandates, subsidies, carrots, sticks, which I think is a part of the equation. But, one of the pieces that I would probably, say that's been a problem is, I do think in the US and in Europe, I think the compliance, screws have been screwed way, way too tight for innovators that do want to build. And I don't want to put this on governments and regulators, to be honest. There's a lot of pieces of the commercial sector, particularly large oligopolistic type industries that have really made it very, very slow and challenging to get new ideas to the center of the market. That's something we really need to, think through. Absolutely. There's been a lot of technological progress in things like solar and wind. Again, look at the ability to actually produce growth of these physical supply chains in China and Asia versus the capacity. Sometimes I feel like you got Elon Musk out there just kind of ignoring or breaking the rules in physical, technological information or technological progress on manufacturing, and sometimes it feels like he's one of one. Now, of course, the West has absolutely been, a huge driver of software, and again, this is an industry that does not have a reputation for asking permission. We see this huge innovation in this part of the business or, this part of the economy in software. But I really do think that you really have to look to Asia for leadership in and actually growth of manufacturing technologies, being able to build projects on time, launching. We couldn't have fully seen that at the time, but I think it's led us to be very well positioned, having our exchange based in Singapore. That's one thing that we need to think about, when we talk about getting capital to flow to these technologies, to the super cycle.
As you said, with the exchange launched, you got the LNG contracts out in trading, carbon emissions offset unit contracts out in trading. So it's there. The foundations and the scale will come. And I wanted to ask you, I want to get back to the technology point. One of the things I love talking with you about technology is I feel like you always see it from a slightly different perspective than I hear other people talking about it. So obviously, everyone's been talking about artificial intelligence and LLM models. And I think a lot of the focus has been on how do I use this to create more content? So it's on the content creation side. Talking with you, obviously that's a big piece, but then there's also the piece of how do I protect my content? How do I protect my IP so some AI doesn't come and take all of my intellectual property and absorb it and walk away with it? How do you protect against that kind of, high-tech plagiarism in a way? And then the other piece is on the content absorption side. As we move into this world where there's going to be more and more and more content created, none of us humans are going to be able to keep up. We're moving into a too long didn't read kind of world. And how can you use this technology to help us bring it down to human scale so that we can actually absorb and be enriched by this sum total of human knowledge that's becoming available in a world where the amount of content being created by artificial intelligence is just going to be explosive. So I'm curious about your thoughts on that, because I've often heard you talk about it in terms of a lot of these things that you've been building on the technology side with the secure digital identity, the ID++ protocol. AI has probably taken them from a nice to have, should have world to a must have world.
And that was something we tried to get ahead of when we started this company, right? I mean, our, very ambitious, lofty goal was to fully occupy that space of all the things that are happening in software innovation. And then all of the move fast and break things. And then on the other side, move slow and make sure, you can minimize risk on the regulatory side, right? Again, that's where Abaxx, this is obviously my passion, is occupying that middle space where I do think probably, 4 or 5 years ahead of, people that would want to try to build a clearinghouse, to bring their new software innovation to the market. And I think we're 4 or 5 years ahead of, probably some of our big market infrastructure competitors on actually bringing new generations of technology into a regulated market. Not because these aren't obviously fabulous tech companies. By the way, if you look at something like ICE or CME or the CBOE, any of these exchanges, they're technology companies, right? And when you talk about artificial intelligence and data, there's probably no area that's been moving faster on that front than the exchange landscape with high frequency trading and essentially the machine learning practices that we've been able to bring to very deterministic, numerical systems like markets. Again, there's nothing new about artificial intelligence and things like numerical deterministic systems like markets, or I'd even say something like video game and, processing games with very tight rules. I think what's changed and where, maybe we should step back and just talk a little bit about the fundamental change. what went from machine learning to artificial intelligence. And I would say it's really the transformer model. Google's paper, attention is all you need. So not only are we obviously investing in massive compute, so there's just the scalability of compute, but it's also just this fundamental ability to, maybe the best way to explain it is like, we're all at a dinner table, right? And our human brains can only, handle so many conversations at once. We only have so much attention to understand the context and the syntax and the emotion and try to maintain a memory of all those conversations and feedback with the words you're saying at the dinner table. Well, the transformer model, what it can do is essentially, instead of having conversations with, 4 or 5 people or whatever our brains can handle at the table, it can have conversations with sort of everybody all at once and understand the intonation and the context. That was the beautiful, the elegant beauty of the transformer model, and the attention, the ability to basically have nodes that can maintain intention and specific knowledge that, you can kind of bring a whole world model out at once. All of these conversations, all of these words, being processed at once. And again, if we think about deterministic systems like markets, that was already happening, right? That was already happening, finding these incredibly large inference models on stock prices or something like that. But now we can do that for basically, language and knowledge and world models. I don't think anybody can even fully imagine what comes next as these things scale. So I like to frame it this way. Right now, I believe Hugging Face, which is essentially the GitHub for OpenAI, particularly what researchers are using in AI. I believe they estimate there's about 5 million people currently working in AI, developing products, working with products. Put that in context, it's estimated that software developers, software engineers are probably, somewhere in the 50 to 100 million range. So we have a sort of a 10x just to get to the level of AI engineers and product builders, getting to the point of where software is. But I actually don't think that's the right metric. If you think about something like Microsoft Excel, this is probably the most powerful computing platform that really changed global supply chains, global information processing. And we have, it's estimated, I think we're, somewhere between 1.5 and 2 billion users of spreadsheets. So that's sort of the low code, no code way to use machine intelligence through the simple, humble spreadsheet. And I think that's exactly what these tools can do, right? We're moving beyond just an inference machine to sort of an age of computer reasoning. And the computer reasoning, particularly if you don't have to have coding skills, I'm sure there's a lot of listeners on this podcast that have no idea what Hugging Face or maybe even GitHub are, but they know what Microsoft Excel is. And these tools are going to, in my view, take us to the narrative and information processing age of Microsoft Excel, where you're literally going to have billions of people using these tools to do computer reasoning. So again, we are barely scratching the surface, but this is going to happen incredibly fast.
And Josh, what's the risk in this incredibly fast transition? The risk that we need to be prepared to manage with better technology and better tools?
One way to frame it is we've moved from being hunters and gatherers of information, or at best living in an information mafia state, where some people have access to information and others don't. And I go back to, your and I background in economics, this thing called the perfect market hypothesis, which was just total nonsense, right? At the end of the day, markets are fractal in nature. They're about, processing information and how fast can we process information. And it's that lag time of information that creates these fractal markets. So again, going back to moving from a information hunter-gatherer world to an information world where, again, all of this context, all of this, all of those dinner tables are going to be brought to real time is just something I don't think we're ready to handle yet in many ways. So, you talk about the supply of information. And I think you had some great episodes talking to, I forget the gentleman's name that was, led a lot of the technology at Bloomberg. We're already starting to deal with narratives in oversupply, right? The guest Ben Hunt likes to say, we're just swimming in information. We don't even know that it's the water that we, in which we're swimming. So we're already, inundated with narratives and sort of broadcasts to the world one way. So we got the supply side, but the demand side is actually where I see the biggest problems, right? It's how do we filter? How do we know, what's manipulated? How we're being manipulated. And this is becoming a real challenge. In many ways, we're seeing people almost disconnecting, becoming untethered from reality in some ways because we just cannot process the oversupply. We see these rise in conspiracy theories. We see these breakdowns in trust. So absolutely, this is all connected in the supply and demand for narratives and information. So that's why we're thinking about moving away from this hunter-gatherer society and having better tools to process this at the individual level. Not just, if you're a big high frequency shop and how you can process it, but how does the individual be able to process all of these things? So yeah, maybe got a little bit meta there, but these are the things that we need to try to grapple with. And as we've been saying before, all of these things are linked when we're talking about smarter markets.
Yeah, and I love the episode we had with our colleague, Carrie Jaquith, on where she talked about, moving to a world where the data has an identity. In a world where you're swamped in oversupply and you can't tell what's true. And we're all seeing it now. You go online, you see a picture, you can't believe your own eyes as to whether the picture is real or doctored or what have you. How are you thinking about being able to change the nature of how we think about identity and having identity for individual data, not just individual people?
Yeah, I think that's where the parallels come from in the technology we're building. I'm a mining engineer. I'm qualified to move dirt. What I'm trying to do is bring the systems thinking of what are the things that have worked, and again, in highly regulated, and by the way, highly decentralized systems, right? I would argue that our financial system, despite, some obviously, very large oligopolistic players in certain fields, our financial system in general is actually quite well robust and decentralized. And we've dealt with a lot of these problems of bringing, information and people and individuals to market in a very structured, methodical way from the outside in. But I would say our big, technology companies are highly, highly centralized. And these models are going to make that even worse. All I'm trying to do is apply things that have worked in sort of decentralized and distributed systems of finance and try to bring that to the world of information. When we think about ID++, absolutely, we're thinking about trying to track and trace the provenance of the very beginning of a supply chain and say, Robert Friedland's copper. But we're also thinking about, can we take those same systems of information supply chains and apply that to data, right? Right now, we have no idea where the content authenticity, starts. Where does that supply chain start? And, as Michelle Dennedy has said on the podcast, we're swimming not in data lakes, but data sewers in many ways, because the bad stuff is polluting the good stuff. We don't have the filters. We don't have the refining, right? Now, I think that's another way to look at it. We have all this raw information potential. Think about it like a crude oil deposit, but we need to extract that data. We need to refine it. We need to make it safe, to be used as jet fuel and the LLMs. That's the sort of the lowest entropy crack of the barrel, right? That's what we need to do with information. So again, all I'm doing is applying what we've done in other systems to thinking about how we do this in information systems. And I think that's where ID++ is so critical, is being able to have those verifiable credentials for not only every individual, but how every individual interacts with every organization, how they act with every piece of data. Again, this is a big task, and that this is, like Smarter Markets, this is a long-term endeavor. Smarter Markets is not that we know Smarter Markets, but we're just trying to ask the questions and build the systems so that we can always progress Smarter Markets. And ID++ is, what we believe will be a big contribution to that.
The systems thinking, I think, is what often gets missed at first blush, because, even going back to even before Smarter Markets, when you were with Eric Townsend, the first host of Smarter Markets, on his Macro Voices podcast, and you talked about the dimensions of Abaxx and the part that was markets, the part that was financial technology, the exchange and clearinghouse, ID++. I think often people would scratch their heads and say, well, these don't seem to be related. But, whenever I talk with you, it's very clear how they're all related. It's the same systems thinking. And it's also related because all these things you're doing are about building networks and helping people use existing networks and systems to collaborate in new and more powerful ways. And so I wanted to ask you, getting those networks going is always a big challenge. Like, what sets this type of business apart, both in terms of the opportunities once it's built and the challenges in getting it there?
Yeah, well, I think it's the recognition of the interconnectedness. And again, one of the first themes that Robert Friedland, mentioned on the podcast is our interconnectedness. But it's fostering those networks and those communities of asking questions, right? That was the point of building the podcast. But I think you're going to start to see in years ahead that we're going to take that from just a bringing guests of our ecosystem on to talk about their piece of the system or piece of the infrastructure. And we're going to start moving this more into real time, being able to query different guests at that dinner table. And by the way, not do it sequentially, but do it, everywhere all at once, as the transformer model will allow us to do, particularly as we network it and bring it to scale. So yeah, I think building communities and building networks are foundational to markets, for all the reasons we've been discussing. And that's absolutely been one of the three pillars of Abaxx. Sometimes it gets questioned, why is an exchange building a podcast? Why is an exchange, launching a community? It's because, that in my mind, particularly where information technology is headed, is going to be, an essential, if not the essential piece of market building.
And when you kind of look across these dimensions of Abaxx, the exchange and clearinghouse, the financial technology, the smarter markets piece, you spent over 5 years laying these foundations. Where do you see the state of what you're doing to build, to make the smarter markets vision, as you said earlier, to make it a reality? Where do you see the state of that as you get to the end of 2024?
Yeah, well, I'd say it in two ways. First, again, I think being able to launch a physical commodity delivery clearinghouse, one of the first one in a decade, if not many decades, that was always the first part of the business model, right? Was to get that piece off the ground, which we now have. Now, of course, it's going to take some time to build liquidity, build connectivity. I think technologically we're there, and we're there in intentions of partnerships. But like I said, there's a lot of pieces of the puzzle, from having the intention to trade to being able to actually do it, technologically, and risk systems and compliance systems. Howard Lutnick, who's just launched a new exchange as well. I think he says 1 year to build connectivity, 1 year to build liquidity, and then it's really year 3 is really the start of a market. And so yeah, we're obviously seeing that. But like you said, the foundation's out of the ground. On the other pieces, on the technology and the community building and the smarter markets building, again, I think all of the foundations are there. We're obviously here on our 200th episode. Sneak peek for those that listen to listen to the podcast, but maybe don't follow Abaxx. We're going to be launching an online community with Smarter Markets Coffee House, and I think we've got a lot of really cool innovations that you're going to see come through that platform, technologically. So the infrastructure is there. And we've also got the infrastructure of our ID++ and some revolutionary things that I think we're doing in networking technology, particularly to bring information to market at scale. I think all of the foundation is absolutely there, but this is a long-term build. I like to joke. I had this conversation with the chairman of the CFTC a couple of weeks ago. Never bet against the time horizons of a mining engineer. The shortest project in mining is 15 years. We've been at this. We built an excellent foundation, I think a unique foundation that probably doesn't exist anywhere else in market infrastructure. And I think the next few years, it's about scaling them to the ambitions and blueprint that we have, even if parts of those blueprints are still fuzzy. And I guess, but again, putting it back into timelines, I think one of the other probably more memorable things that I did on this podcast is, put out the call to the 29ers. Right. To pick up a shovel and start building, sort of echoing, Mark Andreessen and the calls from Silicon Valley. And, in my mind, again, we went through some of those key early points of the podcast. I wouldn't score this well, if I'm honest. Where are we at in those sort of 10 key themes? And we got a lot of work to do before 2029. And, of course, 2029 was referring to, we want to be in a position by then. Look, obviously, we're not going to take the world to net zero by 2029. That was never the call. But we wanted to at least have a game plan by 2029. And I think we have moved the ball forward a little bit with, this podcast, conversations that our guests are having in forums everywhere, our community, Robert Friedland, Jeff Curry, Hannah, everybody, right? But, I think the conversations have front run the execution at a global scale. I am still very optimistic, particularly because of information technology and where we're headed the next couple of years, that we will have a good roadmap and we will have a good plan by 2029. I think, Robert Friedland made the comment, if only we had a super, what did he call it? I don't know. I'm never going to be able to do the words of Robert Friedland justice, but, a super all-knowing supercomputer and can just ask, what's the technology that's going to get us to the energy transition, right? We don't have the technology. I think most guests have been saying that. This is the hardest thing yet because, we don't have a blueprint. We have to make it up as we go along. But I think that information technology piece of it is going to accelerate the next stages way faster than anyone thinks. And, I look at younger generations and their familiarity with all of these topics, whether it's, blockchain or, global markets or ChatGPT or, climate change. The younger generations are miles ahead of us. So we just have to keep building the tools to let those generations execute on as well. So, that's always been the Smarter Markets, path and journey. And I'm still incredibly optimistic. So if I wanted to score those 10 themes of Smarter Markets at episode 200, I don't think we're doing well, but we are going to win. I think that's the more important part.
And the other thing I've learned from you about mining engineers is that they're able to persist and move forward in the face of a lot of pain. And as you said, in construction, the first phase is getting the building out of the ground, laying the foundations, and the wisdom amongst construction is once you get out of the ground, it gets easier. The project's more predictable once you get it out of the ground. But that getting out of the ground is a lot of work. Hasn't been predictable, but now you've got Abaxx out of the ground. What do you think over the next year or two will surprise people as they see these businesses emerge and take shape and the commercial dimensions of Abaxx become revealed?
Yeah, I think just how fast the world's going to start moving, particularly on the technology front. I would actually even argue since the LLMs, we're seeing, kind of almost different market structure and algorithms and trading, really even since like summer, right? So again, it's happening fast in markets, but I think it's going to happen even faster in some other systems and other ways to analyze research. Again, it's not just a language model; it's a world translator model. Taking a conversation between Einstein and Escher or something like that, right? Like we can do that now with words and put all these people at a dinner table and create insights. And I think that's the part I'm most excited about. And it's going to start moving very fast. And that's the most exciting part of this journey.
Thanks again to Josh Crumb, founder and CEO of Abaxx Technologies. We hope you enjoyed this episode. We'll be back next week with another episode of Markets in Transition. We hope you'll join us.
This episode was brought to you in part by Abaxx Exchange, where trading in centrally cleared, physically deliverable LNG and carbon futures contracts is now underway. Ready for smarter markets? Contact us at onboarding@abaxx.exchange. That concludes this week's episode of Smarter Markets by Abaxx. For episode transcripts and additional episode information, including research, editorial, and video content, please visit smartermarkets.media. Please help more people discover the podcast by leaving a review on Apple Podcast, Spotify, YouTube, or your favorite podcast platform. Smarter Markets is presented for informational and entertainment purposes only. The information presented on Smarter Markets should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on Smarter Markets are those of the participants and do not necessarily reflect those of the show's hosts or producer. Smarter Markets, its hosts, guests, employees, and producer, Abaxx Technologies, shall not be held liable for losses resulting from investment decisions based on informational viewpoints presented on Smarter Markets. Thank you for listening, and please join us again next week.